Scott, good to see you. How you doing? Pablo, good to see you as well. How you doing? How you been? We'll see my family. Let's go, Scott. Good evening, Miles. Good to see you as well. Jane, how you doing? Evening, Miles and CMF. Did you have a relaxing weekend? I had a very stressful weekend, but all good. Good evening, Professor Miles. Good to see you as well. Funky, how you doing? Joe, how was your weekend? Hello, brother Miles. T, good to see you as well. How you doing? Let's go, Scott. Okay, I'm just going to pin the live show before we go ahead. There we go. Okay, while everyone tunes in for the first part of the live, I'm going to do intro, disclaimer, and what we're going to talk about on tonight's live. And then by that time, everyone should be tuned in for the first part. So I got rid of the green screen for a while. We'll go back to some other green screen or something else for the time being. But decided to go natural in the background this time. Good evening, Miles and CMF. Manny, good to see you as well. How you doing? Good evening, Miles and family. Good to see you as well. Ian, how you doing? Okay, welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday, Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrency, CBDCs, AI, politics, and essentially legislations. In this live show, essentially, those are the topics that we cover. The disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And also, we do Q&As on this live as well, which means if you do have any questions, put it outside the comment section. More than happy to help you out. Now, okay, on tonight's live, we're going to be covering regarding news regarding the gold market space and the crypto market space, the comparison between them. We're going to talk about some announcements in terms of regulations, not just inside the United States, but on a global basis. We're also going to be talking about on tonight's live regarding essentially some announcements of partnerships, some essentially lending in cryptocurrencies, Bitcoin news, Michael Saylor news, quite a bit to essentially cover on tonight's live, and obviously Ripple news to go through as well. Before we do that, the first news being regarding the gold market space comparing to the crypto market space, let's go inside the comment section first, and then we'll go straight into the first news. So let's see where we're at inside the comment section, and then we'll go straight into the first news. Let's see where we're at. We were here. Hi, Miles CMF Solomon. Good to see you. How you doing? Hi, what's up going? Hi, what's up? Hi, Miles. What's going on for crypto? Johnny, good to see you. How you doing? You just tuned in for the first part. Good evening, CMF. Funky, good to see you. How you doing? Is it a good idea to buy silver or gold, just crypto? I preferably say it's always a better idea to just buy crypto because a small market space is going to revolutionize everything around it. But it does depend on what cryptos you go for. Hello, Miles and CMF members. Scott, good to see you. How you doing? Let's go, family. Let's go, Scott. Share the live. Let's go, Scott. By the way, thank you so much to everybody who has already liked and essentially retweeted this live show. If you're watching this on X right now, thank you so much to everyone who's also essentially liked the live show if you're watching this on YouTube, and thanks so much to everyone who's also put a comment outside the live show as well. Now, the first news on tonight's live is regarding the gold market space. Gold reaches essentially ultimate high records in the holiday trading essentially that's going on right now. Gold essentially soared to records of $4,431 per ounce on essentially the 22nd of December, driven by expectations of Fed rate cuts and geopolitical tensions that are going on around the world. Analysts also suggest that seasonal patterns and thin liquidity may amplify gold's gain, overshadowing potential headwinds and central bank policy shifts. Spot gold essentially achieved a record climb above $4,431 per ounce, driven by the Federal Reserve rate cuts. Also, regarding what's going on, the current market landscape suggests a possible extension of these gains if anticipated. The Federal Reserve also essentially policies materialize. Analysts also underscore the importance of the Fed's potential shifts from rate cuts to possible rate hikes as key factors in the future of gold pricing. The ongoing essentially economic environment marked by inflation and concerns of geopolitical uncertainties may also further amplify the geopolitical may also amplify interest in gold as a essentially safe haven asset. Market participants are also closely monitoring these developments for any signals of policy reversals. The continued rise in gold prices is driven by expectations of the Federal Reserve's. Analysts are still suggesting that. Research teams also indicate that current geopolitical shifts may be helping gold's price. Gold is going up, silver is going up. The digital gold is stuck, unfortunately. Even though Bitcoin has been lauded essentially as the digital gold for the longest time, or a safe haven by Michael Saylor's own words, it doesn't move like one, unfortunately, sometimes. Now, moving on, essentially why crypto markets are still stuck and essentially gold and silver is going up, to the US essentially regulations for cryptocurrencies. Now, it's obviously not all doom and gloom, in other words, for the crypto market space, because there's so much potential in the crypto market space. We just need the right regulations. And 2026 is going to be that year that gives us the regulations for us to be able to move forward inside the crypto space and essentially, in most cases, decouple from Bitcoin's footsteps. That is, I think, the number one thing everybody's looking forward to inside the crypto space, more than institutions coming in, because obviously there's an immense amount of liquidity that they bring towards the table. But all of that is based on regulations. And the number one thing that we want inside the crypto space, other than essentially regulations and the institutions' money, and the bank's money, and the government's money, is to decouple from Bitcoin and to go into utility, which was the main purpose. The entire creation of cryptocurrencies was utility, not pump and dump, or essentially follow Bitcoin's footsteps to eternity. So that is the main thing we are genuinely looking for inside the crypto space. Everybody is. Now, the US laws in terms of the crypto market space is what we're going to talk about next on tonight's live. So, US baptism essentially lawmakers dropped the tax bill with stablecoins and staking reliefs. A baptism essentially during the US House of Representatives is circulating right now a draft bill that would streamline tax rules for investors, traders, and developers for explaining essentially how they would handle reporting their taxes on staking and low-value transactions and wash sales. Representatives essentially Max Miller of Ohio and Steve of Nevada unveiled the Digital Asset Protection Accountability Regulation, Innovation Taxation and Yields Party Act. Essentially, the proposal aims to modernize the Internal Revenue Code of the 1986 by eliminating excessive taxation on everyday crypto transactions and addressing essentially the phantom income and closing gaps that lawmakers say essentially invite tax burdens. The Party Act includes targeted tax exemptions for regulated stablecoins, optional tax essentially deferral on staking and mining rewards, and new essential rules aligning digital assets more closely with traditional securities and commodities. It would also exempt capital gains tax on low-value essential stablecoin transactions under $200, provided a token or the dollar-pegged activity traded and issued by a federally regulated entity. In the most simplest way, the US government is about to be bringing out a set of regulations. One is a Clarity Act, a market structure bill essentially which is similar to a Clarity Act, and some other taxation rules for the crypto space. And what the US is trying to make very, very clear and loud is that stablecoins that are regulated by the US government, in other words, won't be liable for taxation, essentially. And stablecoins that are essentially, foreign stablecoins and they're not regulated by essentially US government or any part of US government departments, unfortunately, that stablecoin is going to be taxed. The bill, in other words, USDC is safe, RLUSD is safe, PYUSD is safe, USDT, not so much. The bill would also essentially apply long-standing wash sales rules to crypto as well, preventing traders from harvesting tax losses while also keeping similar positions. Additionally, it also proposes a mark-to-market accounting election for active digital asset traders, requiring annual essential recognition of gains and losses based on essentially fair market value. A separate provision also applies the constructive sale doctrine to crypto, targeting derivative-based hedging strategies that defer tax indefinitely. Other essentially measures also include granting non-recognition treatments to certain digital asset loans, excluding essentially NFTs, and thinly traded tokens, and extended essentially tax benefits to foreign investors who trade crypto through US brokers. While most provisions also would take effect upon enticement, the stablecoin essentially exemption would also begin a tax year starting after December 31st, 2025. The US going into 2026 is now looking into the taxation of cryptocurrencies, and they're not the only one. The UK is also looking into taxation going into January as well. So is the EU and every other country essentially as part of the crypto space right now, according to Chain Analysis. Today, even the smallest crypto transactions can trigger tax calculations, while other areas of a law lack clarity and invite abuse, said essentially Horsford. Our discussions draft to the Digital Asset Party Act takes a targeted essentially approach that provides an even essentially playing field for consumers and businesses alike to benefit from this new essentially form of payment. Americans' tax code has failed to keep pace with modern financial technology, said essentially Miller. This baptism essentially legislation brings clarity, parity, and fairness and common sense to taxations of digital assets. It also protects consumers from making everyday purchases and ensures that the rules are clear for innovators and investors and strengthens the compliance so anyone plays essentially these by the same rules. The reason why the governments are bringing taxation rules for the cryptocurrency space now is because 2026 is high profile investors and institutional money. And that is why they're bringing taxation rules. And also taxation rules for the crypto space was always going to be the last, essentially, pillar, let's say, for the crypto space. Tax in crypto was always going to be the last pillar, alongside essentially a Clarity Act or a market structure bill. It's only because the institutions that have our clients are coming in right now, so no more gray areas, no more Wild West. It's a mature market space that is heavily essentially taxed, depending on different jurisdictions, and some jurisdictions lightly taxed to bring innovation. Now, moving on from the US in terms of their essentially rules and regulations and going into Hong Kong for their regulations. And it is something similar that's happening with all the regulations inside the crypto space between every jurisdiction. But before we go through Hong Kong, let's go inside the comment section first. Let's see what's happening there. And then we'll go straight into the next news. So let's see where we were at inside the comment section. We were here, I think. Here, yeah. Jane, good to see you. Silver all-time high can reach $1,000. It's possible, yes. Hi, Miles, Crypto Q, good to see you. How you doing? Share the live. Let's go, Scott. XLM, XDC, XRP, HBAR. Let's go. The government will make some sort of move before the new year. That way, it will be taking point as essentially we enter the new year. Good evening, Miles. How are you doing? I'm doing great, Cali. Good to see you as well. Taking very long time for bull run has put me into depression. Don't worry about it, Johnny. I see XDC doing something unexpected and soon. Okay, Scott. Trump is going to make an announcement. Sorry, Miles, I'm a bit late on. I hope I haven't missed too much, mate. Nope, you're good on. You're perfect on time, Addy. The Clarity Act is coming. I think many careers are riding on this passage. Facts. Hi, hello, Miles. The CMF. Comatose, good to see you. How you doing? And all crypto must be passed before the midterms. Otherwise, there will be hurdles that may. I agree 100%. And the hurdles are going to be from Democratic Party, mostly Pocahontas. Let's go XRP. Let's go Scott. Folks, do not give up your XRP unless you want to sell it to me. Let's go regulations, tax laws, etc. in place. It's time to stop procrastinating on this issue. Mike, good to see you as well, brother. How you doing? Will Ripple Labs go public in Q1? Doubtful, but is a possibility of Ripple somewhere down the line going essentially public. It could be Q1, you never know. You're on time, my friend. Let's go Scott. Okay, Hong Kong. Hong Kong essentially proposes new rules to tap insurance capital into cryptocurrencies. As I said, the US is not the only one essentially looking into rules and regulations for the crypto space. So is Hong Kong and a few other countries, which we're going to go essentially and talk about on tonight's live. Hong Kong is essentially plotting a move to unlock multi-billion-dollar capital pools for digital assets and related infrastructure, potentially essentially marketing a watershed moment for institutional crypto adoption in the Asian market space. The Hong Kong Insurance Essentially Authority, IA, is also proposing new rules that would allow the city's 158 authorized issuers to channel funds into essentially assets, including cryptocurrencies, according to essentially the presentation that was seen by Bloomberg. While the proposal signals an institutional thought towards crypto, the regulator is still keeping its guard up with conservative essentially risk frameworks, and the proposal requires issuers to keep aside $1 in reserve for every essentially dollar invested in crypto, representing 100% risk charge essentially on direct crypto asset holdings. And this is heavy capital requirements mandated essentially as a buffer again essentially digital assets as gain renowned volatility, and also stablecoins, however, would attract risk charges essentially based on the fiat currency they are pegged to. The Bloomberg report also said the Hong Kong Monetary Authority is expected to issue its first stablecoin licensing in early 2026. The industry also won't wait too essentially long for a formal look at the text, as the essentially insurance authority is set to open the proposals for public consultation from February essentially through April, followed essentially by legislative submissions later in this year, essentially this year coming to an end. Hong Kong is also about to be opening its doors. 158 institutions are about to be entering the market space from the Hong Kong market space, essentially going into 2026. 2026 is all about institutions and regulations and tax laws, which it all leads to liquidity and utility, to be fairly honest, which is exactly what we wanted for the longest time. Now, Coinbase is what we're going to talk about next on tonight's live. Moving away from Hong Kong and US essentially regulations to Coinbase. Coinbase essentially has agreed to buy the clearing company to deepen prediction markets essentially push. Prediction markets are becoming a massive market space inside the crypto space right now. It's becoming the new crypto casino, you could pretty much say. You could pretty much bet on anything that you think is possible that's going to be happening soon. And in some cases, prediction markets could actually be used as some sort of data as well, because it shows you which essentially what the majority think in terms of their mindsets on what footsteps they're going to be taking inside the market space. So Coinbase said it had agreed to essentially buy the clearinghouse company to help grow its newly launched prediction essentially market as a part of the crypto exchange's plan to become an all-in-one platform for trading everything. This is brilliant news for Coinbase, brilliant news for crypto space. San Francisco-based The Clearing Company is a startup led by Tony, who has essentially worked extensively in the industry, including as the head of growth at Prediction Markets Kowski. Terms of the deal were essentially not disclosed to the public. The transaction, which is expected to close in January, comes as prediction markets pick up steam, with essentially weekly notional volumes now topping $4 billion according to Doom analyst data. Last week, also essentially Coinbase started letting users trade on the outcomes of real-world events and partnerships with Kowski. The events range from political elections and economic reports to cultural movements and sports. Coinbase also said the deal would bring in a team with specialized experience building and scaling events based on trading systems. It also includes veterans at Polymarket, a blockchain essentially based platform, as well as the former chief compliance officer at Gillespie. Last week, the exchange said it had plans to expand the functionalities available on this platform to also include novel cryptocurrencies, futures contracts, and stocks, as well as prediction markets. It is using the initiative to position itself as the everything exchange going into 2026. That's what Coinbase is going to be known for. And it's not Coinbase that's the only one that's doing this. Crypto.com is also trying to become an everything exchange as well, and so is Binance, and so is Kraken. The list goes on. The company's rivals include essentially Robinhood, Kraken, Gemini, Crypto.com have already started launching equity trading and prediction markets to their users. The clearing essentially company raised $15 million in essentially seed round led by Union Square Ventures, and essentially in which Coinbase Ventures participated last month, and it applied to its essentially license to run a clearinghouse from the Commodities Futures and Trading Commission, CFTC. Essentially the market space that's absolutely booming right now in terms of essential prediction market spaces of who you think is going to be the next mayor, senator, or what regulation will be passed, or will we have rate cuts, or even sporting events essentially what's going on. It is the next essentially wave, and a lot of money essentially being flowing into prediction market spaces. But as I said, it actually can be used as data because it shows you what the majority assume is going to be happening, and most likely what actions they will take in terms of trading as well. Now, moving on from Coinbase trying to become an everything app, which is great news for the crypto space, to strategy. There was news going around today on X and every other social media platform that Strategy has stopped buying Bitcoin because they're going to be starting to raise cash, in other words. And it seems like it was false news. So This was what the news essentially was spreading around today. Strategy pauses Bitcoin buys and boosting cash reserves by $748 million. Strategy, the largest publicly traded holder of Bitcoin, lifted essentially its cash reserves by $747.8 million. The company's USD reserves intended as a fund through which Strategy can pay the dividends on its preferred stock. And according to the news that was essentially released, that's what Strategy was going to use the money for. Now it stands at roughly $2.2 billion. This latest capital essentially raise came entirely via the sales of the firm's essentially common stocks, according to essentially their SEC filings today. At that time, essentially, the $2.2 billion the reserve is now large enough to fund 32 months of preferred dividends. In boosting its cash balance, Strategy chooses not to add any Bitcoin after 2 consecutive weeks of buying about $1 billion worth of Bitcoin. The company continues to hold 671,268 Bitcoins, purchased for just over $50 billion and worth about $60.4 billion based on Bitcoin's current price, roughly sitting around $90,000. MSTR stock is also higher by 3% essentially pre-market alongside Bitcoin's modest weekend essentially gains in price. The stock also remains lower by more than 40% year to date. So, according to essentially MicroStrategy, nope, they haven't stopped and they're going to be continuing to buy essentially Bitcoin. The money that's raised isn't going to be paid essentially towards mostly just dividends. Also, it's going to go towards Bitcoin essentially purchases. Now, I don't know if that's going to be a smart move for Michael Saylor, but I mean, 2026 is going to be an exceptional year for the crypto space. So there's a chance of that, Bitcoin reaching those new highs again. Obviously, with all the regulations in place, the institutions, high-profile clients, and so much more bringing towards the table. But it is still a good idea for Michael Saylor to pay those dividends essentially off for his company or for his shareholders. Now, moving on essentially from what MicroStrategy may have said or maybe essentially doing to BlackRock. BlackRock today has named essentially Bitcoin ETFs, the Bitcoin ETF that it has, IBIT, a top 2025 theme essentially despite price slumps. Essentially, BlackRock named its iShares Bitcoin Trust IBIT ETF one of the top 3 investment themes for 2025. The firm placed IBIT essentially alongside 2 more traditional offerings, the iShares essentially 0 to 3 months Treasury Bond ETF and the iShares Top 20 US Stocks ETF also. Bitcoin has dropped more than 4% year to date, the first essentially decline in 3 years, and IBIT has mirrored that performance. Even so, the ETF has seen strong essentially investor interest. IBIT ranks 6th along essentially all ETFs by 2025 inflows, pulling in over $25 billion since January. It's easy to essentially frame this as BlackRock simply promoting its highest essentially revenue product, said essentially Nate Garcia, the president of the ETF store. But I see it more as a firm doubling down on its conviction that Bitcoin belongs in diversified portfolios. Garcia also noted that BlackRock has other essentially ETFs like the gold focus essentially IAU that are outperforming IBIT and charge essentially higher fees. Yet the firm is also spotlighting a product that underperformed in 2025, a rare essentially move in the industry that typically pushes its top performing funds. If the objective were essentially purely revenue generation, BlackRock has no shortage of ETFs with significantly higher fees that it could emphasize instead, he said. Asset managers are also typically in the business of spotlighting underperforming essentially products, particularly when they have a deep essentially bench of outperforming alternatives they could essentially highlight. The inclusion of IBIT as a top 2025 theme signals a long-term bet on crypto assets by the world's largest asset manager. For investors who still essentially see crypto as a speculative or fringe, BlackRock's positioning of Bitcoin alongside cash and stocks may shift that essentially perception. So, even though essentially BlackRock has, essentially had some sort of performance slumps on their IBIT, quite a bit of outflows have been happening, they still see the Bitcoin ETF as top 3 performing essentially ETFs they've ever pretty much had, or in 2025 essentially. And it does show a good image for the crypto space, even though Bitcoin has slumped quite badly, you could say, this year, but it still shows a good image that BlackRock still sees a future in it. Now, moving on from what BlackRock essentially regarding what they essentially think regarding their Bitcoin ETF to JP Morgan now. Before we go through JP Morgan news, let's go inside the comment section first. That's what's happening there, and then straight into the next news. Also, by the way, thank you so much, honestly, to everybody who has liked essentially the live show. If you watch it on X, CMF members, if you haven't liked or retweeted, smash the like buttons and smash the retweet buttons as well. And thanks to everyone who has. I'm getting notifications. Thank you so much. Let's see where we're at inside the comment section, and then we'll go straight into the next news. I hope and pray that everyone have a wonderful holiday season and enjoying it with the commercialization that has taken over. Drop a 1 on if you feel the CMF is the best group online. It definitely is. And Miles is by far the best group lead online. Let's go, Scott. Thanks so much for the kind words, brother. Shared live. Let's go, Scott. Miles, since XRP, XLM, XDC, and HBAR are usually mentioned in the same conversations, is it safe to assume that these are critical in the future's financial markets? I would say 100% yes. In terms of the financial market space, XRP is the leader, XLM will be leading second, XDC will be leading third, 100%. XLM is a sleeper, just my humble opinion, not advice. I agree. XLM is definitely a sleeper. Miles is in his zone. Keep rolling, Miles. Good information, my brother. Let's go, Scott. Thanks for just kind words, brother. Let's go, Ian. Morning, Miles and CMF. Shelly, good to see you as well. How you doing, Shelly? How you been? Good evening, Miles and family. Susie, good to see you as well. How you doing? Peekaboo, I found you. Country, good to see you as well. How you doing? How you been? Now, JP Morgan is what we're going to talk about next on tonight's live. As I said, 2026, it's all about institutional money. And you can tell that when essentially not just crypto exchanges are opening up departments within their own platforms for high-profile clients and institutions for 2026. But you can also tell that when essentially BNY Mellon is opening up a department just for essentially institutions and high-profile clients, and so is Vanguard, and the list, so is Franklin Templeton, so is Grayscale, the list goes on. And now JP Morgan is also opening up a department in their own essentially firm, in their own bank, for high-profile clients and institutional essentially clients to be entered the market space for the first time, looking towards cryptocurrencies. We're genuinely moving away from retail money and into high-profile clients and institutional money in 2026 and regulations and utility. JP Morgan Chase is weighing the idea whether to offer cryptocurrency trading services to institutional clients. Bloomberg's reported essentially on that today, citing essentially a person familiar with the matter. The move would make the largest US bank by asset one of the most prominent financial institutions yet to consider entering the crypto trading space by major clients. According to essentially the report, JP Morgan is assessing different types of products, including spot and derivatives trading, but has not committed essentially to launching any specific essentially services. Imagine JP Morgan launching a platform like Binance or Crypto.com, crypto trading services. That's quite, major. The decision essentially will depend on client demand, perceived risks, and whether the bank sees long-term business opportunities in the sector, and I think they do. JP Morgan's deliberation comes as long as investors, from hedge funds to pension managers, look for more secure and regulated ways to trade digital assets. The clients often essentially can't or won't use retail-focused platforms like Coinbase or Binance due to their compliance, custody, and trade execution concerns. But banks have all the regulations and licenses needed to essentially operate safely. And if anything does go essentially wrong with major banks like JP Morgan, the government will always be there to bail them out. So therefore, clients know that their money or their crypto will be safe with JP Morgan. Instead, they require dedicated infrastructure that can handle large trades, essentially offer deeper liquidity, and meet institutional compliance standards essentially going forward. Hence why companies like essentially Ripple are so big on the idea of collecting as many licensing as they can and essentially applying for more in terms of becoming some sort of a bank, because they want to create that trust with everybody, essentially high-profile clients, institutions, retail section, because it's the most important factor. Because the majority of the crypto space think, essentially it's all about who's the fastest inside the crypto space of processing transactions. They couldn't care less. High-profile clients and institutions couldn't care less about essentially who can process crypto transactions a split second faster than the other project. They genuinely couldn't care less. It's only the retail section, not everybody inside the retail section, but some people inside the retail section that think for some oddly reason institutions care about if this project is a split second faster than XRP or split second faster than that project. It's got nothing to do with that. It's just that if clients feel safe, high profile clients and institutions feel safe using this platform, then that's all that matters. And feeling safe is about the regulations. Feeling safe is about the licensing this platform has. Hence why they're not so keen on going towards Binance or Coinbase, which in my opinion, there's nothing wrong with Binance or Coinbase. But hence they would rather go towards JP Morgan if they came out with a crypto trading platform, because they have all the regulations. And if anything does go wrong, they'll be bailed out essentially by the US government. Same goes essentially with HSBC Bank or Nationwide Bank or NatWest Bank. NatWest Bank went bust once in the UK. The UK government bailed them out. That's the safety aspect of why people prefer to use those platforms compared to others. Hence why Ripple is trying to get as many licensings as it can so that clients feel safe using essentially RippleNet or feel safe using the XRP ledger or any other services that Ripple may offer. And this is why I would say essentially Ripple goes here, everybody else on the blockchain pretty much goes there inside the financial sector. Now, instead, they require dedicated infrastructure that can handle loss trades, offer deeper liquidity, and meet institutional compliance standards. Coinbase Prime is one of the leaders in the US as a crypto trading platform tailored for institutions, but competition is growing. Bullish, which essentially owns CoinDesk, operates as a digital asset exchange built for institutional trading. Kraken has a similar essentially offering, though its Kraken institutional platform, several other platforms, including Fidelity Digital Assets and Galaxy Digital, are also active in the space. Now, JP Morgan could be added to that mix. If JP Morgan genuinely comes out with a crypto trading platform, it's definitely going to boom. It might not boom inside the retail section because people inside the retail section of the crypto space are not very big on JP Morgan, but it'll definitely boom for essentially high profile clients or essentially other institutions around the world. The US regulatory essentially environment around crypto has started to show signs of change, which an important crypto bill expected to essentially be passed soon. That decision gave many institutions more confidence that digital asset markets are maturing under essentially clearer rules, even as prices remain choppy through the end of the year. In other words, institutions, high-profile clients don't care about this choppy essentially movement we're having inside the crypto space because they know next year is all about regulations and them entering the market space. Now, moving on essentially from JP Morgan thinking about becoming the next Coinbase to Venezuela. But before we talk about Venezuela, let's go inside the conversation first. This was happening there, straight to the next news. Scott, let's go. What up, Miles and CMF? Ray, good to see you as well, brother. How you doing? How you been? Scott, let's go. Let's go, Miles. Let's go, Scott. Now, Venezuela has turned towards stablecoins due to essentially being heavily sanctioned by the US government. And obviously there are reasons why Venezuela is heavily sanctioned due to their essentially relationship with the Iranian government and essentially the Chinese government. Now, Venezuela essentially turned to USDT for 80% of its crude oil payments. 80% of payments processed in Venezuela for oil trades is in USDT. According to local economists, essentially, Oliver's, Venezuela collects 80% of its crude oil sales revenue in Tether's USDT. The economists revealed the information in a recent, essentially, interview. Oliver said that digital assets like USDT help sustain Venezuela's oil economy, especially under essentially United States sanctions. And I just want to point this out. This is why SWIFT will fail even as a digital concept, because it's not, as I said a long time ago, SWIFT, as much as it being a messaging standard, it's also a political tool that goes around and sanctions essentially countries, and hence why SWIFT, non-digital or digital, it's not really going to be working out for them moving forward. Messaging standard, not really, more of a political tool. And if essentially, this is what happens when countries are pushed, they start using alternative payment methods, and in this case, 80% of oil trades in USDT. Added to that country's production of oil, essentially, he further essentially added that the country's production of oil has risen to 1 million barrels per day. The economists attributed that the growth of oil production in Venezuela essentially to the utilization of cryptocurrencies. The most direct link this year to the crypto sector comes from there, because ultimately almost 80% of oil revenue is being collected in cryptocurrencies and stablecoins, said Olivers. And just to be fair, it's not just 80% in USDT, it's 80% mostly in USDT and other stablecoins. Carousel, essentially, Oliver also reveals a stablecoin essentially on stablecoins in this oil sector. However, the South American essentially countries struggle to liquidate its stablecoin holdings. This is due to controls on limiting how governments can essentially cash out and use their funds. Oliver's also added that this is causing a bottleneck in the foreign exchange markets, and that puts pressure essentially on demand, drives up the price, and that's why we have to essentially be very cautious. Local reports also stated that USDT has become a part of Venezuela's oil trades. The South American country's oil industry brings in $12 million. Most of this money is coming from China. Integrating essentially stablecoins like USDT in the oil industry is a huge move. It indicates that cryptocurrencies have essentially grown and proved their usefulness in major essentially industries. It also shows that stablecoins can be used to settle commodities trades and when traditional payment systems fail. Oliver also essentially has been receiving oil Corsus has also been receiving oil payments in USDT since 2024. The country resorted to crypto essentially to evade US sanctions, which were imposed in 2019 under the Trump administration. The full financial essentially sanctions on PDVSA, the state-owned oil and natural gas company, and Venezuela's central bank took effect at that time. PDVSA started requiring digital wallets and USDT payments for spot oil sales by the end of March 2020, essentially by the end of March 2024 is pretty much when they started essentially going to USD payments for oil, but it's all being revealed now. Caucus essentially then also authorized select banks and exchanges to offer USDT to private companies for Bolivians. A bank or essentially exchange deposits stablecoins into a state-approved wallet before buyers can pay suppliers or sell them privately. However, in 2024, Tether froze 41 USDT wallets connected to Venezuelan oil sanction invasions. The wallets were linked to the essentially OFAC's especially designated national list. In March, Washington imposed a 25% tariff on those buying essentially Venezuelan oil. 4 months later, around $119 million worth of crypto was sold to Venezuelan private buyers based on data from retainers. Oil shipments from Caracas rose to their third highest average this year. However, also tensions between the Washington and Caracas have also been growing. President Donald Trump ordered a naval blockade to prevent sanctioned oil tankers from entering or leaving essentially Venezuela for the theft of our assets and many other reasons, including illicit activities and other reasons that I can't mention online. The Venezuelan regime has been designated a foreign organization, Trump essentially wrote on Social Truth. That therefore today I am ordering a total and complete blockade of all sanctioned oil tankers going into and out of Venezuela. The Caracas government also did not accept what it called Trump's essentially gostral threat. And the US essentially seized an oil tanker off the coast of South America country. 10 days later, the US also seized a second oil tanker just to show Venezuela they're not joking. Any oil leaving Venezuela or coming in will be seized. Despite the sanctions, the Venezuelan gross domestic product, GDP, grew by essentially $102.38 billion in 2023 to $119.81 billion in 2024. Prolonged sanctions may make the South American countries a case study in stablecoin-based oil revenue. Stablecoins are boosting essentially South America, especially countries that are sanctioned under essentially the Trump administration. It does show on the aspect of Venezuela, for many reasons that some people may not understand, it should be heavily sanctioned due to essentially the leader of the country, Venezuela, not treating his own citizens like human beings. That's here and nor there. We're going to put that to one side. But the idea that stable coins went from, even though they're pegged to the US dollars, and yes, we have had cases in the past where they've decoupled from the US dollars and crashed the market space, but going from what we were inside the crypto market space in terms of stable coins to now legitimately be used for oil transactions, even though it's through sanctioned countries, it does show that essentially, we've moved from speculative to real money inside the crypto space, putting everything else to one side, sanctioned country, Venezuela situation, all that. Just keeping with the crypto aspect, it does show that crypto has come a long way. Now, Ghana is what we're going to talk about next on tonight's live. Thoughts on Tether's involvement in Trump's ballroom construction? Well, knowing Trump, he accepts money pretty much from anyone. Not anyone, but majority accepts. Trump accepts donations from majority. You could pretty much say there's a select group you wouldn't accept, obviously from North Korea or something like that. But that doesn't mean Tether, in my opinion, is still going to get through the door. It might put them on the good list, but it still wouldn't get them through the door, is what I would say. Trump drives a hard bargain when it comes to essentially making a business deal happen. Ripple's also part of the ballroom. So is Coinbase. I mean, they've all paid their dues as well for that, their money for that. So regarding their involvements in Trump's ballroom construction, I would say it gets them on the good list, wouldn't get them through the door still. Now, Africa is becoming a hotspot for cryptocurrencies and AI data infrastructure. A huge amount of investments are being poured into Africa right now, from Microsoft, from OpenAI, essentially from even Ripple, for example, even Coinbase, Binance. I mean, the list goes on. Not just tech companies, but also essentially major tech, essentially not just essentially crypto companies, but also major tech infrastructure AI data companies as well. It is genuinely becoming a hotspot right now. And then the newest addition to enter the crypto space is Ghana. Nigeria entered a long time ago, but Ghana has just decided to enter the crypto space. So here it is. Ghana is going to be legalizing cryptocurrency trading through new regulatory frameworks. Ghana has just passed legislation that legalizes cryptocurrency trading and establishes regulatory oversight for digital asset services. According to a Cointelegraph, essentially Bank of Ghana, Governor Johnson announced essentially that the Parliament approved the Virtual Asset Service Providers Bill, a law essentially that creates a legal framework for crypto activity in West African nations. Virtual asset trading is now legal and no one will be arrested for engaging in cryptocurrencies. Johnson stated at the Bank essentially of Ghana's annual essentially 9 lessons, Carlos and essentially Thanksgiving service. The legislation grants the Bank of Ghana essentially authority to license and supervise crypto asset service providers. The timing matches earlier essentially central bank communications and about introducing crypto regulations by the end of 2025. The new framework essentially positions Ghana to protect consumers from fraud, money laundering, and systematic risks. It also removes legal uncertainties that previously surround the cryptocurrency activity. The law also aims to support innovation and expand financial inclusion, particularly among young people and tech entrepreneurs. Ghana's move follows a pattern across sub-Saharan Africa, where governments choose essentially regulations over probation. We recently covered how Kenya's essentially Virtual Asset Service Provider Act took effect on November 4th, 2025. Also, essentially, with Bitcoin ATMs appearing in Nibiru shopping malls within days, Kenya's regulatory approach demonstrates that clear legal frameworks can enable essentially rapid infrastructure and development. The legislation could also influence how other West African essentially regulators approach similar laws. Ghana's essentially framework balances innovation with consumer safeguards rather than restricting activity outright. This regulatory clarity may also position Ghana as a more attractive destination for crypto innovation and investments compared to jurisdictions with ambiguous law status. In other words, the UK. Believe it or not, I mean, the list of countries that are just overtaking the UK when it comes to crypto regulations is just now ridiculous. The list is essentially miles long. And the UK is still thinking about, or mentioning, we will become a crypto hub. I don't know how the UK wants to become a crypto hub, or how they're thinking, London will become an AI or a crypto hub when they don't take action. I'm guessing it's just in their own, essentially, la la land head, pretty much. Nigeria also continues to essentially dominate regional crypto activity. According to Chain Analysis, Nigeria essentially received at least $92 billion in crypto value during the reporting period. So honestly, if you thought to yourself, African nations don't bring that much towards the table, $92 billion is a lot of money from one African country to bring towards the table, and Ghana is pretty much the next one to greenlight cryptocurrencies. Kenya greenlighted them this year as well, and other West African nations are following in suit. However, Ghana's proactive regulatory stance could also help capture market share as investors and exchanges seek jurisdictions with established legal frameworks. Traditional financial institutions may now engage more confidently with crypto activity in Ghana. The framework clarifies compliance requirements while setting operational and cybersecurity standards for service providers. The Bank of Ghana plans to establish a dedicated digital asset unit for sector monitoring. Implementation phases will also roll out during 2026 as an existing providers register and meet compliance standards. Any country that does not bring out regulations before 2026 or in essentially Q1 of 2026, then forget about it, because the money is already being flowing somewhere else. Honestly, any country that essentially is still taking their time and don't release their crypto regulations by the end of 2025 or at least in Q1 of 2026, then forget about it, because all the money genuinely has just been, to everywhere else that is essentially allowing cryptocurrencies to operate within a legal framework. Now, Binance is what we'll talk about next. Before we talk about Binance, let's go to the comment section first. That's where we're at. Scott, let's go. Great job, Miles. Let's go, Scott. Now, Binance CEO Richard Teng. We're going to go through his perspective going into 2026. So he's outlined his essentially, bullet points of what he thinks is 2026 is all about inside the crypto space, and he is Binance's CEO. So Richard Teng, Binance CEO, announced essentially a leadership restructure for essentially with He as the co-CEO during the Binance Blockchain Week on essentially December 3rd, focusing on global expansions. The leadership change aims to bolster institutional adoption and essentially navigate regulatory landscapes, potentially influencing Binance's global position and market dynamics in the coming years. During a panel discussion at essentially the Binance Blockchain Week, CEO Richard Teng announced key strategies for Binance's 2026 expansion. Expansions into licensed market spaces, because it's all about regulations and licenses in 2026, and a revamped leadership with He as the co-CEO were also highlighted. Richard Teng previously with the ADGM essentially emphasized the importance of acquiring comprehensive licensings, positioning Binance for institutional adoption. He, also a Binance co-founder, joins Teng during essentially the global growth and reaching 1 billion users. The 2025 announcement led to increased interest in institutional trading, with a 13% rise reported. Over 200 public companies right now hold Bitcoin or some sort of cryptocurrencies, indicating a market shift towards institutional stability and potentially stabilizing the future of cryptocurrency prices. Teng also essentially strategy and new leadership structure could lead to important regulatory and market essentially impacts. Also, Richard Teng shared his excitement about the company's future, stating, "So today we are very excited to announce a new leadership structure with He as the co-CEO. Historical trends also do suggest that further adoption of digital assets driven by institutional involvements and potential altcoin ETFs launches under new regulatory standards. Previous bull markets in 2024 linked to ETF approvals set the stage for 2026 super cycle." Now, we've talked about a super cycle before for 2026, and the opinion essentially did come from Binance again, but he's added more to what he thinks is going to be happening. A super cycle, similar markets saw shift from retail to institutional dominance, affecting assets inside the crypto space in a positive way. Experts predict that major regulatory resolutions in 2026 enhancing market clarity. Analysts also essentially foresee significant growth fueled by a mix of institutional inflows and stablecoin advancements aligning with historical progressions, and Teng's outlined essentially expansion goals. Brad, also CEO of Ripple Labs, remarked on this future by saying, "Bets are on major legal battles will be resolved by that time," citing US regulatory clarity for stablecoins and payments. He's not the only one saying this. Richard Teng, CEO of Binance, is not the only one saying a super cycle is essentially going to be happening in 2026. Not a bull cycle or a bear cycle, but a super cycle for 2026, because It's all about regulations, and it's all about high-profile clients and all about institutions in 2026. Every crypto exchange is opened up a department for institutions, high-profile clients. Every major institution, non-crypto related, has also opened up a crypto essentially related department to get institutions and high-profile clients. And even JP Morgan is thinking about now to open a crypto department to become the next crypto, essentially crypto.com or Coinbase or Binance, to cater to them, to the high-profile clients in 2026 that want to be inside the crypto space. This is about utility, regulations, institutions, high-profile clients. Moving away from retail money to institutional money. And he's not the only one. Richard Tang is not the only one that thinks this is going to be happening, because obviously it's based on so many factors and data points. Binance, essentially Brad, CEO of Ripple, also sees this type of cycle happening in 2026. Not just Richard Tang, but also Brad sees this happening. Now, moving on from that to the CFTC. Before we talk about the CFTC, let's go to the comment section first. Let's see what's happening there. And then we go straight into the next news. So let's see where we're at. We were here. Great job, Miles. Scott. Miles, have you not mentioned much about ACH in a while? Where do you stand on this project currently? I would I would say, personally, I would now jump out of ACH and just go towards and put whatever I have in ACH into, I would say, put 80% of what I have in ACH and the rest just keep it in. Put 80% of what I have in ACH into XRP and keep 20% just to see what happens, or 10% in ACH just to see what happens with ACH. It's still going to be playing a role in off-ramps and on-ramps, but as the regulations essentially go forward and Ripple becomes an actual bank, would it matter that much on ramps and off ramps? To ACH, not so much, I would have to say. So I would say put 90% of ACH back into XRP, keep 10% just in case of something may happen. Not financial advice whatsoever at all. Now, because it all changed when Ripple decided to go for a banking license and it got approved on essentially the first stage. Nobody understands the UK is never transparent about any regulations they have in place. Facts, honestly. And also, this action London takes is rather adding friction to the situation when it does act, to my thinking. I agree 100%. I mean, London has always been known as the hub for the financial sector, and it moves as a snail's pace, to be fairly honest. Why is Hot Hula not mentioned with other fintech cryptos? It is not a good project. It is a good project, I would have to say. It's just not as mentioned because it's not been on the whole crypto, essentially meme coin wave or NFT wave. It's not been on many waves, to be very honest, but it's still a good project. Well, it sounds like the United States. So the UK is not crypto friendly. The UK is, we don't know where it stands, I'll be honest. It's not that it's not crypto friendly, it's just it doesn't care about the crypto space. It says that it cares about the crypto space and it wants to become a crypto hub. It wants to become an AI hub, but it doesn't do anything. They're not bringing out any regulations. They keep on thinking about regulations and they get public feedback, but not much comes out after that. Is that famous dip before the huge rally, or are we in a bear market? Nope, famous dip. Why would you leave ACH? What bad has happened with ACH? Nothing bad has happened to ACH. But Ripple essentially getting when the time comes and they get a full operating license, as a bank, then the idea of on-ramps and off-ramps through ACH, not saying it won't happen, still it will, but not really needed that much because, Ripple being its own bank will offer a service of on-ramps and off-ramps. So I was on that basis, essentially. Now, nothing bad against these ACH. Still a good project, genuine project. But that's why I said, if it's me, I wouldn't jump out of it completely regarding ACH. I wouldn't jump out of it completely. But I will put majority of what I have in ACH into XRP going into 2026. I keep some in ACH on the basis that it might still be useful going ahead. Now, CFTC is what we're going to talk about next on tonight's live. CFTC essentially chair says that crypto market bill is nearly ready for President Trump. Great news. The crypto essentially market bill is nearly ready. Newly confirmed Commodities Futures Trading Commission Chairman essentially Michael said today that Congress is close to passing the long-awaited legislation to set rules for the US cryptocurrency markets, a move that could soon reach President Trump's desk. Speaking of essentially after his confirmation as the CFTC's 16th chairman, Michael said lawmakers were poised to advance a digital asset market structure bill, hinting at a shift in Washington essentially to provide clearer oversight of crypto trading and related products. Congress is poised to send digital asset market structure legislation that will cement the US as the crypto capital of the world to President Trump's desk. Michael was confirmed essentially by the US Senate last week following a confirmation process. He thanked President Trump for essentially appointing him to lead the agency, he said, for the CFTC, and is entering a new phase as technology reshapes the financial markets. Retail participation, commodities essentially, and derivative markets is now record levels while new digital platforms and products continue to emerge. Michael said he added that these changes increase the need for clearer and practical essential rules to protect market stability. The proposed legislation would also define how essentially digital assets are regulated inside the United States and clarify the CFTC's role alongside the Securities Exchange Commission (SEC). Supporters of the bill say it would help the US remain competitive as other countries move ahead with crypto regulations. Michael also essentially said the CFTC is well positioned to oversee these changes and provide what he called common sense rules for evolving market spaces, something that Gary Gensler should have used common sense for once, maybe in his lifetime. He also praised current and former regulators for guiding the agency through the period of transition from the CFTC. Under his leadership, Michael also said the CFTC would focus on maintaining secure and orderly markets while allowing innovation to develop within a clear regulatory framework. So on one side of the spectrum, they're suggesting it's going to be January for a market structural clarity. In other words, from the other side of the spectrum, they're suggesting it could be on Trump's desk by the end of the year. We have to honestly see how it plays out. Either way, we know it's going to happen. We know it's going to be passed. It's just about the timeline. Is it going to be January or is it going to be end of the year? End of the year, brilliant. Going to 2026, it's all great. January, also still good. It's the beginning month of the year. Either way it goes, it's going to be a green light. It's going to be brilliant. Now, Wells Fargo is what we're going to talk about next on tonight's live. Before we talk about Wells Fargo, let's go inside the comment section first. This was happening there, and then straight into the next news. So, hi, Miles, CMF. Peg, good to see you. How you doing, Peg? How you been? Thoughts on Axeler? Good, on-field, attentive. Axeler's all right. I wouldn't say it's a must-have project, but it's all right. Now, Wells Fargo. Wells Fargo begins issuing credit, essentially, against Bitcoin holdings. Wells Fargo has begun essentially issuing credit backed by Bitcoin. The move involves institutional and high net worth clients using Bitcoin or spot Bitcoin ETFs as collateral. It's big news when Wells Fargo takes footsteps like this, going into lending and service and borrowing essentially services for cryptocurrency, in this case being Bitcoin. This shift indicates regulatory changes, raising demand for BTC-backed financing, and internal policy expansions reported during Q4 2025. Notably, reports indicate that Wells Fargo now accepts Bitcoin exposure for second credit products, including loans and credit lines. The activity centers on wealth management and trading clients rather than retail customers. However, the bank has not essentially published formal confirmation on its official website. According to Cryptopolitan and Bitcoin-focused outlets, Wells Fargo previously allowed Bitcoin ETFs as collateral. These products included spot Bitcoin ETFs, such as BlackRock's IBIT during Q4 2025. The bank also reportedly expanded its framework beyond earlier restrictions. Meanwhile, sources linked to the shift to regulatory adjustments, including the Basel III reforms, and these changes also reclassified Bitcoin under the improved capital treatment for banks. As a result, lenders also gain more flexibility when structuring essentially Bitcoin-backed credit products. Michael Saylor, essentially executive chairman of MicroStrategy, also publicly stated that the major US banks now issue credit back essentially against Bitcoin. He named Wells Fargo, JP Morgan, Citi, BNY Mellon, Bank of America, and Charles Schwab's. According to Saylor, these institutions moved rapidly from caution to active engagement. Saylor said the past 12 months brought internal changes across large banks. He noted that Citibank, BNY Mellon, and PNC, JP Morgan, Wells Fargo, and Vanguard adjusted their crypto policies. Reports also disclosed that Vanguard enabled tradings of Bitcoin and XRP, essentially linked ETFs, for their client base. According to also Saylor, issued essentially an estimated $50 billion in new Bitcoin essentially backed credit lines since September 2025. He added that Charles Schwab's and Citibank planned Bitcoin custody and lending services also. Goldman Sachs previously issued Bitcoin backed loans back in 2022. However, Saylor also cited regulatory tones shifts under US President Donald Trump. He said that these changes encourage faster product essentially aligning, and still banks continue addressing legal operational and risk constraints before a wider essentially access. Honestly, it is essentially obviously positive on Bitcoin's end in terms of all the lending and borrowing services that are coming in from all these major institutions, but it also shows credibility towards the crypto space as well in an indirect way. From speculative to a mature market space where these big behemoths want a piece of the pie now. Moving on from that to Ripple. Before we talk about Ripple, which is also relatable to lending and borrowing services, let's go inside the comment section first. This was happening there, straight into the next news. Evening, Miles and CMF. Davey, good to see you. How you doing? How you been? Your thoughts on silver? Good. Honestly, excellent, I would have to say. Silver is definitely, climbing, but it's also a sleeping giant alongside gold. Silver is going to do ridiculous numbers, not, overnight, but over time it will do a hefty amount of numbers. I would still, rather say being inside the crypto space will bring you more than gold and silver. Gold is, too far-fetched right now if anybody even thinks about going for it. If you have a lot of money stashed, if you want to, your choice, your money. Silver, you could go also for now, but I would still say a better asset to go for is XRP. And I'm not saying this in a funny way at all. And I know you never asked the question of, should I go for something else, or just your thoughts on silver. Thoughts on silver is a brilliant asset, brilliant precious metal, and it will always do well in terms of trying to build a foundation from it, in my opinion. But I would still say against Bitcoin, essentially against gold and silver, if you want to make more money, not financial advice whatsoever at all, in my opinion, XRP will bring you more than those two would. Based on essentially in terms of the utility that still hasn't started, based on essentially also the quantity you could pretty much get. Now, Ripple. Good evening, Miles. Good to see you as well. How you doing? So, Ripple's new lending system positions XRP as key institutional asset. So you have all these behemoths offering essentially lending and borrowing services. Well, Ripple's about to offer the exact same thing. So, here is essentially what Ripple's going to be offering. Ripple's latest move to enhance the functionalities of its blockchain essentially network is essentially, in terms of RippleNet, takes XRP beyond its traditional role as a bridge currency for cross-border payments by introducing essentially a new protocol native lending system. Ripple is positioning XRP as an essential essentially tool in institutional credit markets. This shift is set to redefine the role of XRP, creating a new avenue for institutional adoption and demand. Not only was essentially XRP playing the middleman role for everything the XRP ledger pretty much does, or Ripple does, but XRP is now going to be used as collateral to borrow against. Ripple's new lending protocol aims to create a secure fixed-rate lending system by using isolated single-asset vaults, SAVs. These vaults isolate essential risk by containing only a single asset, such as XRP or RLUSD, full stop, as collateral. This structure essentially significantly reduces the potential for systematic risk that often arises in pooled liquidity models common in decentralized finance. Edward Hinz, a Ripple engineer, explained that the new lending system brings predictability and stability for institutions, such as fintech leaders and market essentially makers, by providing fixed-term, fixed-rate lending options. This is what I mean, essentially, if for people that thought to themselves, they have to set up essentially some sort of a crypto trust, or they have to, a while ago, people asked me the question of, should I set up a private company, a public company, LLC, a trust, or whatever for their crypto portfolios, or going to lending and borrowing and so on. And I told everyone to wait, because the major institutions, or in this case, Ripple themselves, will be offering these types of services to you as we go along. And they're much more secure to use than any other services that other people might be trying to, offer to you right now. Because you got to think as how a high-profile client would think. A high-profile client wouldn't even touch Binance or essentially Coinbase. And again, there's nothing wrong with Binance or Coinbase. And in our eyes, there's nothing wrong with it whatsoever. But in their eyes, there is. And if you think like a high profile client, you'll be much more better off. Your assets will always be safer than if you think like a retail member. Honestly, if you are thinking about going into lending, borrowing, using crypto assets collateral, opening up LLC, private company, public company, or trust, whatever you may be thinking to yourselves, if you wait just a little bit longer, these behemoths that have all the credibility, and if anything ever does go wrong, they are guaranteed to be bailed out by the US government or any other government, depending on what jurisdiction they're in. Again, no financial advice whatsoever, but they're safer essentially in there than they are with any influencers. Nothing wrong to influencers whatsoever, but influencers that are offering services to people. So, with the launch of this lending protocol, XRP moves from its traditional role as a transactional bridge currency to an asset that can generate yield for holders. XRP holders can now provide liquidity to institutional credit facilities, receiving fixed yield in return. Imagine putting your XRP with essentially Ripple and earning on it when institutions are using it. This change is expected to reduce the ideal supply of XRP in circulation, making it more scarce and valuable. The new lending system is a dual-purpose tool facilitating both cross-border payments and institutional lending. The data from Q3 2025 indicates that XRP's role in tokenized finance has expanded. The XRP ledger's real-world assets market capitalization surged by 215%, reaching $364.2 million. This growth signals increasing institutional interest in the infrastructure Ripple has built, including the use of XRP and RLUSD as foundational assets inside the space. Ripple's efforts to build institutional-grade credit infrastructure for XRP are further supported by strict partnerships and regulatory alignments. The acquisition of Hidden Road, now Ripple Prime, and partnerships with major players like MasterCard and WeBank indicates Ripple's commitment to bridging traditional finance with blockchain technology. Ripple's collaboration with MasterCard to pilot the new payment solution further solidifies its role in the global financial landscape. Moreover, Ripple is also preparing for the potential approval of the other swap ETFs for XRP, with 9 asset managers also having to file applications. Ripple is now also essentially, Ripple's new protocol sets the stage for XRP to play a central role in the future of finance for institutions. The protocol's success will also depend on factors like validator adoption and regulatory clarity. Ripple plans to implement additional features in its future mainnet releases, including pooled lending and underwritten credit facilities, which could further enhance XRP's utility. The innovative nature of Ripple's lending protocol, combined with its technical advantages such as low transaction fees and high transaction speeds, and positions XRP as a strong contender in the institutional credit market space. It's just another example of Ripple doesn't have to wait on the sidelines. XRP doesn't have to wait on the sidelines to be chosen for, to be used as collateral by an institution. Ripple could just take that footstep forward and make sure essentially XRP is used essentially as a line of credit for institutions. Other blockchains can't do the exact same footsteps. Other blockchains cannot take the exact same footsteps that Ripple has taken to expand its XRP ledger, because they're not private companies. They're just foundations or some developers, for example. But Ripple always can take the next footsteps to make sure the XRP ledger is always expanding and bringing something towards the table. On that line of one, we're going into a super cycle in 2026, all about institutions and high-profile clients, and JP Morgan is even thinking about becoming some sort of a crypto exchange. 2, Ripple going to be offering a line of credit so XRP could be used as collateral, and that your XRP one day essentially stored with Ripple could be used by institutions, and you would earn a yield on your XRP, which means you would never have to sell your XRP. You can just earn money on top of it by holding it with Ripple, essentially going forward. On that note, we have reached the endings of tonight's live. This was the CMF live show. This was episode essentially 422 of the CMF live show. Thank you so much to everybody who tuned in essentially tonight. The CMF stands for Crypto Miles Family. My name is Miles. You can tune into this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulations. And on tonight's live, we talked about essentially gold comparing it to essentially the crypto market space. We talked about the US essentially lawmakers drawing up a tax bill for stablecoins, non-American stablecoins. We also talked about Hong Kong proposing new regulations, 158 institutions entering the crypto space in 2026 from Hong Kong. We talked about Coinbase essentially purchasing out a clearing company to deepen its footsteps inside the essentially market space of betting. We talked about essentially strategy, maybe pausing their Bitcoin purchases, but we'll see. We talked about essentially BlackRock in terms of naming the Bitcoin IBIT ETF a top 3 essentially ETF they've ever had pretty much in 2025. We talked about JP Morgan becoming some sort of a crypto exchange going to 2026 is exactly what they're thinking of doing. We talked about essentially Venezuela in terms of stablecoin usage. We also went through news on tonight's live regarding essentially Ghana legalizing cryptocurrencies, Kenya and Nigeria, and how much they bring towards the table. We talked about Binance CEO Richard Tang and Brad's essential perspective on 2026. We also talked about tonight's live regarding CFTC chairman suggesting that the market structure bill is still on the table and could be signed in by the end of the year. And it might not be January, could be a lot more sooner. We also talked about Wells Fargo in terms of issuing essentially credit against cryptocurrencies, specifically Bitcoin. And we talked about Ripple offering the exact same services. So, on that note, we have reached the end of tonight's live. This was episode 422. I will see everybody tomorrow, same time as usual, 10 p.m. long time onwards. The disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. I will see everybody tomorrow, same timing as usual. Everybody have a good day or a good night, depending on where you're around the world. Like, comment, subscribe, follow if you already haven't. If you have, honestly, thank you so much to every single one of you who smashed the like buttons and the retweet buttons. CMF members, thank you so much. Now, let's see where we're at. So the comment section before we do call it a night. Let's see where we're at. Awesome, Miles. Let's go, Tony. And let's go, Tony. Paul, good to see you. How you doing? Woodhouse, good to see you. How you doing? What percentage would you expect on that platform? What platform? On Ripple's platform? We don't know yet. Thank you, Miles and CMF. Have a good night and see you tomorrow. Let's go, Mike. See you tomorrow sometime as usual, brother. Good night, Miles and family. Great laugh. Many thanks. See you tomorrow. Ian, see you tomorrow sometime as usual. Miles, did you know how much interest Ripple would pay to stake XRP? In terms of yield, they haven't disclosed it in any sort of a way. That's great news. You did say this would come. Thanks, Miles. See you all tomorrow, CMF. Let's go. Shelly, facts. I did say it would come. Mike, see you tomorrow at the same time as usual. Miles, another fantastic evening. Cheers, mate. Top man. Keep up the good work. Let's go, Addy. See you tomorrow, same time as usual. David, see you tomorrow, same time as usual. Good night, Country. See you tomorrow, same time as usual as well. Good night, Miles, and see you tomorrow night. Funky, see you tomorrow, same time as usual. Good night, Miles. Good news about XRP again. Bless you. Let's go, Callie. See you tomorrow, same time as usual. I will see everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world. Same members. See you tomorrow, same time as usual. Night, everyone. Brilliant show as always. See you all tomorrow. Let's go, Joe. See you.